In this lesson, we're going to go over the most basic accounting question that you might receive in investment banking interviews, which is to walk through the three financial statements. So if you get this question in an interview and the interviewer says, walk me through the three financial statements, or tell me about the income statement, balance sheet, and cash flow statement, I would say something like the following. The three financial statements are the income statement, the balance sheet, and the cash flow statement. The income statement tracks a company's revenue and expenses over a period of time, and all the way at the bottom of the statement, after taking into account everything, you get down to the company's bottom line, its net income, what it makes after paying for all expenses and taxes. The balance sheet provides a snapshot of a company's resources, its assets, and then how it acquired those resources, its liabilities and shareholders' equity. It provides a snapshot of those accounts at a certain point in time. The most important rule with the balance sheet is that assets must equal liabilities plus shareholders' equity so that both sides are always in balance. Then the cash flow statement shows how a company's cash balance changes over time. You start with the net income and then you add back any non-cash charges. You factor in how items on the balance sheet, working capital items, have actually changed, any investments the company has made, and any financing activities the company has participated in. And then at the bottom, once you've taken all those into account, you get to how the company's cash balance has changed over time. Then that cash balance number flows into the new version of the balance sheet, and all the other changes from the cash flow statement are reflected on that new version of the balance sheet as well. So that's a simple example of how you'd walk through the three statements in the context of an interview. Now, you'll notice that I did not go into a whole lot of detail on everything, giving examples of specific line items or anything like that in the walkthrough I just did, and normally that's fine. If you're not certain, what you want to do is after you finish your explanation, just ask the interviewer, was that enough detail, or did you want me to go into the specifics on any of the items or on any of the statements or on specific line items that you might actually see? And just do that to double check yourself. In most cases, though, I would say that it's better to just give a few sentences of an overview rather than going on for a minute or 2 minutes or anything long like that, because generally, if you go on for longer than 30 or 40 seconds, most interviewers are going to cut you off unless it's a really complex question. So keep that in mind that brevity is usually a better idea versus trying to go into detail on every single possible item on the three financial statements here. Now, if you get a follow-up question on how the statements are actually linked together and the interviewer wants more detail on that, what I would say is something like the following. The way the statements link together is that on the income statement, the net income, what you get as the bottom line in the income statement, will flow into the cash flow statement because it's the top item right there. Any other non-cash charges on the income statement are also reflected and added back at the top of the cash flow statement. Then any changes in the balance sheet are reflected on the cash flow statement in changes in operating assets and liabilities. So that's how the balance sheet ties together. Any investments that have increased the asset value on the balance sheet also show up under investing activities in the cash flow statement. And then any changes to the company's long-term liabilities or their financing, their shareholders' equity on the balance sheet show up under financing activities in the cash flow statement. Then at the end, once you've figured in all those changes, you get to the increase or decrease in cash. That increase or decrease in cash then flows into the new version of the balance sheet and becomes your cash balance at the top. The rest of your assets and liabilities have already changed and have already been reflected on the cash flow statement, so there's no need to do anything there. And then for shareholders' equity, the only change that you need to make is that you need to make sure that net income from the income statement is also flowing in there. And that's how everything ties together. So that's a quick overview of two of the most common interview questions that you might get on the topic of the three financial statements. Coming up next, we're going to delve into specific interview questions, and we'll go through a couple examples starting with the very simple ones involving depreciation and inventory, and then go up to more complex topics and into multi-step scenarios and how to answer those questions in the context of interviews.